Hey everybody, what's going on? It is James here with Crypto Common Sense, and I have a Bitcoin/cryptocurrency update for Thursday, April the 23rd. So before I jump into the content today, please do me a huge favor, hit that thumbs up button. Don't forget to subscribe to the channel, and of course, don't forget to click that bell icon to get notifications when I release new updates. Also, if you're not already a member of the Patron, you can check a description for the link to join where you can support the channel and get more frequent updates. So wow, what a day Bitcoin had. Okay, I wanted to do this video because obviously the market had some really big movements in the last 24 hours. A lot of shorts were probably devastated, but if you guys have been following along with the channel, hopefully you were prepared for this, and hopefully you were at least mindful of the fact that this was a possibility all along. So what I'm going to do is I'm going to pull up a couple of charts, and we're going to talk about the targets that get hit and what I think is coming next. But also, guys, I want to remind you that if you will set aside your biases, right? You're always going to have some bias for sure. Like me, I tend to be very biased. But if you'll set aside those biases and just really follow what the chart is telling you, the chart's going to lead you where you need to go. So for example, when I shot a video a couple days ago, I had said that, I tended to lean a little bit more bearish, but that in reality, all we had done is touched the bottom of this upward sloping line, and I said that even though I lean more bearish, I would probably more apt to look for longs than shorts at that point. Now, I didn't take any longs other than some scalps. I didn't catch the 10% move or anything like that. So I'm not going to sit here and say I did. I didn't. I wish I had. Okay, but the reason that I didn't get caught off sides in this thing and absolutely crushed was because the chart gave a very clear signal. If you're looking at this on a candlestick chart, okay, this looks like a mess. It just looks like sideways movement, okay? And sideways movement can mean, either or. It can mean it goes up or goes down, right? It just looks like consolidation on a candlestick chart. But the one thing that I would tell you is when you see that kind of stuff, go look at a line chart, right? The line charts tend to be a lot more clean. And in this case, I was actually able to spot this, and I posted about it on Facebook as well as on like the Patreon and the Discord. It was a head and shoulders, an inverse head and shoulders, and it was confirmed with volume. Okay, so what happens with an inverse head and shoulders? It's actually a reversal signal, and it signals that price is gonna, could probably change direction. Okay, so with an inverse head and shoulders, what you're looking for is you're looking for higher sell volume on the left shoulder. You're looking for weaker sell volume on the head, and then preferably weak sell volume on the right shoulder as well. Okay, so this was a head and shoulder pattern confirmed with volume. So at that point, it's hard to be bearish because that's a reversal, and if this is going down, that's going to reverse back up more times than not. And if you look at this, and I want to take volume back off just so it's a little easier to see. If we're looking at this on a daily chart, let's jump over to the daily. And I know this is messy, but let me turn this stuff off. It'll be a little easier to see. So we had our high, we had our higher low, we had our higher high, we had our higher low, we had a lower high. Okay, so this is where people started to get super bearish, understandably so. Okay, but then it put in a higher low, and it put in a higher low here. This is where it was doing that inverse head and shoulders. You can't just stay stuck in, oh well, this was a higher low, it's definitely going lower, because it had just put in a reversal, right? So now suddenly this becomes a higher low. So you got lower high, but a higher low. And it stood to reason that it would probably take out, this level, or at least go up to retest this level here around 7,100. Okay, 7,100 is what I expected. The fact that it went higher than that did catch me a little bit off guard. Didn't get caught in a trade, but it did catch me off guard. I didn't expect it to go up that fast. Okay, so again, maybe somebody else called it perfectly, I don't know. But, while I was looking for that, pump to 8,000, which we didn't get, by the way, we only got 7,800. But while I was looking for that pump toward 8,000, I didn't think it was going to happen in a single, 1 hour candle. And we did have a ridiculous candle. It was like a 1 hour candle that was like 7% earlier today. Okay, so if you look here, 7.22% in that candle. Pretty ridiculous. But again, if you've been watching the channel, you knew about this possibility, you knew to watch for it, and hopefully you were able to capitalize on it. So if we put some stuff back in the chart here, right, it looks like a mess, but this is actually all really clean, really simple stuff. So the first thing we're looking at here, let me turn off the other stuff. So this is our 50 moving average. This is our 200 moving average. These are daily moving averages, right? So when we broke above the 50, again, that's another reason to think that it could pump up to retest the 200. And historically speaking, most markets, not just Bitcoin, but most markets will retest their 200 moving average when they break through them, okay? Bitcoin is no exception to this. When it breaks those 200, it likes to come up and retest it. On the Z pump, it actually went right through it before falling back down, right? But the same thing happened back here. We fell underneath it and then we came right back up, right before further downside. If you go back, I'm going to take the 50 off just so it's a little easier to see. Same thing in the 2018 bear market, right? Came down, came up, bullish retest, bounced off of it. Came down, bearish retest, fell, right? Bearish retest, fell, bearish retest, fell, over and over, okay? So that's normal. If you get really far away from the 200 moving average, you typically come back to it before making your next move. Could it be down? It could. Could it be up? It could, right? Doesn't tell you which way it's going. It's just, anytime you get far away from this, you have to be aware of that. Also, guys, if you remember, I talked about this 19-week moving average that my friend David Eisner shared with me a little over a year ago and that I've been talking about ever since. And same thing with it. When you get really far off this 19-week moving average, it's a regular moving average, not an exponential average, right? Price tends to come back to it. It just sticks to this thing, right? See this? Every time you come up off it, right back down. Up off it, right back down. Up off it, right back down. Again and again and again, right? Too far below it, right back up. Too far below it, right back up. So on and so forth, okay? So when we dumped back in September, came right back up in October. Dumped, came right back up. Too far up off of it, right back down. Too far below it, and look where we came. Right back up to that 19-week moving average, okay? So it's not that it's easy to say, okay, this is when it's going to happen. This is the whole thing about trading. This is the difference in being an analyst and being a trader. You can be an analyst and be really, really good at calling the direction of the market, but to be a trader, it's not just about calling the direction of the market, it's about calling the timing of the market, right? So it's one thing to sit back and say, well, I think this is going to 8,000. It's another thing to actually enter a trade at, say, $4,000 and ride that to 8,000, right? That's much more difficult to do. Bottom line is, none of this stuff is surprising. It shouldn't have caught you off guard because we're being sucked back up to the 19-week moving average. We're being sucked back up to the 200-day moving average. If I put the drawings back on here, this is our golden pocket, right? Our Fibonacci levels from top to bottom here. This is our 61.8 Fibonacci level all the way up to the 65 level, okay? It sits there. The 200-day moving average is right inside of it. We have this rising wedge on price action. Top of that wedge is right up here, around 7,900, okay? And then we have this old red line, which if you guys remember, was the line that started back in February 2019. And so now we're coming up for a retest of the underside, okay? And if we look at RSI, same thing. We have this really long running green line, but we can ignore that for now. And on the smaller time frame, from back here in March until now, we're in a rising wedge on RSI. These yellow lines, touch, 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 right? So we're inside this wedge. Rising wedges are bearish, okay? They're not bullish. They're bearish in nature. And if you look at this on the bigger time frame, and this is what I've been saying all along, this looks like your dump, right? Your capitulation move, your pump, right? And it looks to me like, it still looks to me like it's got further downside coming, okay? I posted about this on Twitter earlier. I just pulled it up so I don't have to find the chart again. This is actually a tweet I did back on April 19th, right? And this is what I'm looking for. Now, it doesn't mean I'm going to, trade it this way. It doesn't mean that I'm going to get into a short at 8,000 and ride it to 1,300. When I trade, I'm trading the smaller time frames, okay? I'm not trying to short from 8,000 to 1,300. I'm not doing that, okay? I might take a short at 8,000 if we get there and try to ride it back down to, say, 6,000 or 7,000 or 7,500 or 6,500. It depends on what the chart looks like at the time. But I do better for myself by doing multiple trades and catching the smaller moves than trying to catch one giant move. Okay. But this is kind of what I'm watching for. This move from around 10.5 down to 3,800. If it pulls back to the $8,000 level, right, which it hasn't yet. Right now it's pulled to 7,800, I think it was, right. Then that would give a trend target down around $1,300, which lines up with the 2017 high that never got retested. Okay, I'm not talking about the all-time high. I'm talking about when it first ran up to $1,300 and never came back to retest it. So that's still what I'm watching for. I still think this is the most likely scenario, especially because of what's happening on stocks. And I talked about stocks a lot lately, so I really don't want to go off on a huge tangent on stocks today, other than to say that right now what's happening in the stock market is basically a carbon copy of what happened during the Great Depression. I'm not saying we'll have a Great Depression. I have no idea, right? But from a chart point of view, it's playing out like every bubble in history, okay? And I've talked about that in previous videos, so again, I don't want to beat a dead horse, but bottom line is right now we seem to be in the complacency stage with the stock market, and if the stock market suddenly decides that it's going to go ahead and go full bear, and this ends up being a dead cat bounce, I think Bitcoin has almost no chance of starting a new bull market during a bear market on the global stocks, okay? So that's the reason that I'm still so skeptical that we're going to, really start a bull run here. And this is still very bearish structure, okay? So you have to remember that this is not what you want to see. This 6 green candles up, it's good if you're in a swing long. But as far as a macro picture, you don't want to see this. This isn't good, right? That's the funny thing about, markets is what seems to be good on the surface isn't, okay? This isn't good, because this just simply looks like a pullback. Now, if this was putting in structure where it came down, came up, put in a couple of green weeks, came down, made a higher low, came up with a couple of green weeks, made a higher high, well, then you'd have bullish structure on a weekly chart. You'd have a high, a higher low, a higher high. And even though we weren't higher than this back here, we'd still have bullish structure, and this would be a reversal signal. But we're not getting that. What we're getting is very much an impulsive down pullback because of the sharp sell-off. So you get this natural, bounce out of it, and it just looks like it's going to do this. Okay. So I'm still not bullish on Bitcoin, right? On the macro picture, I'm still looking for lower lows. I still don't think 3,800 was the low. I could be wrong. And if I am, that's fine. I have no problem with that. I'll trade whatever's there, but. It's just one of those things. It's doing what markets do. It's coming back to these moving averages and coming back to its golden pocket on the daily chart. Playing out this rising wedge on the daily chart. All that good stuff. That's what I'm saying, right? On the bigger picture. On the 3-day chart, this candle closed, and you can see that it had a very clean break of that downward sloping yellow trend line. So I'm not all that interested in the line anymore. I'll leave it on there probably for a couple more weeks just to see if it comes down for a bullish retest. But after that, I think that line's probably going to be played out. And I'm more interested in the red box again at this point, okay, on the 3-day chart. But here's the thing that you guys have to really keep in mind. This volume is getting lower and lower, whereas this price is going up. So that's diverging, and it's bearish in nature. You don't want falling volume on a rally, okay? If you see falling volume, it's a sign that the move is a fake move. And that goes for both sides. If you have a bear move with falling volume, it tends to be a sign that the bears are getting exhausted and you're getting ready to turn back up. And if you have a bull move on falling volume, it tends to be a sign that the bulls are exhausted and it's going to turn back down. So, I'm keeping an eye on that. That being said, it's important to note that this is a high, higher low, higher high, higher low, and this is a higher high. So I still feel like we have bullish structure on the 3-day chart, okay? And of course, on the daily chart, it's kind of a mixed bag of tricks, okay? Because it's starting to range a little bit. So that's what I'm seeing, right? I haven't, changed my stance at all. I'm still feeling the same way I felt about the market as a whole. On the CME, I was pointing this out, had a nice conversation in Discord earlier today with one of the members, that I've been watching the CME for the last year because it seems like they have a lot more control in the market than what anybody is giving them credit for. You almost never see people talking about the CME on like Twitter or social media. But I'm starting to wonder, and I started talking about this back in October originally, right? This is where I started to wonder about it, and they keep proving this to be accurate. It's almost as if they're the ones controlling where the market is flowing. And I say they, I'm not talking about one entity. I'm talking about the CME traders, right? And a lot of people are saying that the miners are using CME to hedge and stuff. I have no idea who it is trading on the CME. I just know that the CME charts are a lot cleaner, okay? Let me give you an example. When we broke above the 200-day moving average on the CME, this needs to be blue. I have color codes, so when I look at moving averages, I know what I'm looking at. Somehow they got turned orange, which is my 50. All right, so the 200 moving average, when we broke above it back here in 2019, and it came back down and basically consolidated right around that was the kickoff to the 2019 bull run. When it came down in October of 2019 and it retested this, that was the kickoff to the $3,000 Z pump, okay? Back in October where it went from 7,400 all the way up to, it says 10.1 here in the CME, but it went to like 10.5 on most of the other exchanges. When we fell underneath it, right, back here, and then came back above it, this was a textbook bearish retest. Break, support, retest it from the other side, and then what you're looking for is you're looking for a continuation move, which looks like this. So you measure from the top here, and you measure down, right? Then you measure to that, and your target was $7,000, okay? And it just absolutely collapsed, right? Capitulation occurred. But if it moved down, I mean, it moved down here. I don't really pay that much attention to the lines past the one. A little bit, right? I want to pay attention a little bit, but there's no way to know which line it's going to stop at, okay? So what this is good for is just picking a trend target. So if you get short here, you're looking for $7,000, and that helps you with your risk reward. If you're going for, a $2,000 move down, you can put a $1,000 stop loss in, et cetera, okay? But the CME is very, very clean right now, and its 200 moving average is actually way up at 86.83. So that's interesting to me. A little bit concerning, a little bit, gives me hesitation on a short position. And also we have this massive gap up here, $9,065. And even if you're drawing it from this candle here, it's 84.75. Okay. So there is a bull gap there, and it is completely possible this thing wants to fill that gap, right? So we have to be mindful of that, because the thing is, on the daily chart, guys, there's still a lot of room for this to grow. If it can break outside of this rising wedge on price and RSI is still fairly low. It's only sitting at 58 right now, okay? So it could still go way the hell up here, and price could move up another $1,000, $1,500, and it would just be cracking into the overbought territory, okay? So do keep that in mind, right? Again, we just have to watch it and see what unfolds. But there are some possibilities that thing could still go a lot higher than where it's at, and still turn back south, okay? Let's see what else I got on here for you guys. So one thing I'm going to pull in, and again, I don't want to go off on a tangent on stocks, but there's still people who have this idea in their head that Bitcoin is decoupled from stocks, okay? You see where this pumped at? Right around 9 o'clock this morning was that hourly candle. Okay, well, right here, this was the 9 o'clock candle this morning on the Dow Jones futures, and you can see it pumped up too, right? And now it's starting to fall back down. So the interesting question now is, will Bitcoin, continue following this? If this falls, will Bitcoin fall with it, or is Bitcoin going to finally decouple? I don't know, right? Or this may not continue falling. This is just an hourly chart. It's not a big chart. So interesting stuff going on in these stocks right now. And again, I don't want to get off on a tangent on stocks, but bottom line, everybody should be aware of this pattern by now. Okay. Everyone should know what this pattern is. Okay. If you zoom out, in fact, let's put it on a monthly. Turn off the moving average here. Looks like a bubble, right? You got a 10-year parabolic advance. Some people would say it's not parabolic. It's definitely parabolic. It went up from around 6,500 all the way up to, almost 30,000 okay, with no real correction along the way. So you got that entire advance, and then you have this huge pullback. Kind of looks like this, no? Huge advance, huge pullback, and then the huge bounce afterward. I saw a thread on Twitter. Once in a while, there's some good stuff on there, and it was somebody comparing this stock run and the stock pullback and the stock bounce to some of these other bubbles in history. And what they had noticed was most of these bubbles, these dead cat bounces that happen after the pop, they actually come up within about 15% of the top. Okay, so let me give you an example of what I'm talking about. So what they were saying was that if you take it from the top and measure down about 15%, you'll get the dead cat bounce. So for example, here is the top in 2017, came down, came up, right? And if you look, came up within 13.6% of the top, okay? And if you look at, I don't know if this goes back to 1929. No, it doesn't go. Oh, maybe. Oh, it does. Okay, cool. All right. So this is the 1929 crash, right? To kick off the Great Depression. And measure from the top down. So that's 22%. Now, in their example, they showed it as being 15. I wonder if maybe it was a weekly chart that was 15. I seriously doubt it's going to go back that far in the weekly. It did. Wow, okay. So let's look here. So if we measure from that top down to that, still 23%. I don't know where they're getting 15% on this. No idea. But anyway, that's what they're saying is essentially once you get these big runs like this. I mean, if I didn't tell you the dates on this, look at this. You wouldn't know that was 1929, right? By just looking at that. It looks a whole lot like, you got about a 10-year run, about 8 years actually in this case. You have the big crash, right? Then you have the dead cat bounce where people think, okay, thank God it's over. And then you have the real dump. Down, up, down, right? Almost looks like a lightning bolt, okay? Same thing with Bitcoin. This was, the run up in 2017, the big dump, the pump up, and then down. But this was actually more gradual than the stock market crash, which is kind of funny. But if you look at, so there's the Dow Jones crash, right? If we look at the 2008 financial crisis, 2009, look at this. This one's a little different, right? That's the tech bubble back there, 2001 bubble. It looks quite a bit different to me. But then again, this is the Dow Jones. I should probably look at the NASDAQ for that. Let's look at the NASDAQ because that's where that bubble was. All right, so here's the NASDAQ, and from the top up here to this peak was about 14%, right? You had the same thing. You had the big parabolic move up, right? The huge crash, the dead cat bounce, and then the dump, right? If we look at Bitcoin's 2014 crash, well, 2013. Put it on a weekly chart, go back. Here's the top. This was in November of 2013. This came up within about 16% of the top. Had the parabolic run, the dump, the dead cat bounce, and the bear market. Okay. If we look at, this was the little mini bubble that happened in like the summer of 2013. And this one didn't come near as close. It was 40% off. But still, same basic structure. Up, crash, dead cat bounce, boom. If we look at 2012, 2011, this one didn't really do it. This is the only one that really, I don't know if it's just because the volume was so low and the liquidity was so low or what the deal was. But on this one, it basically was just like it had this needle top, right? Then had this bounce the very next week. Maybe that, If I put it on a daily, maybe it looks the same. And then the downside, let's look at it on a daily. I'm gonna go way back in time here. I mean, on a daily, it looks the same. You get the big parabolic climb. You got the huge dump. You got the pump, and then you have your downside. And that one, on a daily, it came within about 23 to 25%, somewhere in that ballpark. Okay. So, and I haven't looked at it, but let's look at the 2019 bubble, the Echo bubble. Is this 2019? Oh, that's 2018. So we had our parabolic climb, we had our dump, we had our bounce, and we of course had our dump, which took a lot longer to play out, right? But let's measure this one from the top in June. It came within about 5%. So that one was, you know, quite a bit different. And it could just be because it was a smaller bubble. But all in all, the stock market looks like it's in a bubble. You know, Bitcoin doesn't really look like it's in a bubble anymore. It looked like its bubble played out. You know, so it could be that some of these Bitcoin, you know, bulls, you know, maybe they're right. Maybe the thing does, you know, start to replace some of the, you know, traditional investments and things. Maybe this is going to be, you know, where it filled in that gap that I talked about forever and then just, you know, goes crazy. I don't think so. Okay. But, you know, got to be open to all possibilities. It is possible. Somebody in my group the other day said, you know, I'm surprised you're holding any Bitcoin as bearish as you are. And I try to mention this and, you know, from time to time. I don't want to talk about it in every video because I don't want to be like always talking about money and stuff, like how much money I have or how much money I don't have and stuff like that. But yeah, I always hold, you know, a couple of Bitcoin, or right now I think it's just shy of 2 Bitcoin. It's like 1.8 or 1.81 or something Bitcoin that I have. And I hold that. Part of it's because of it's a hedge, right? In case I'm wrong and I wake up one day and it suddenly went nuts. It's like, okay, well, at least I have some Bitcoin. But it's not really that as much as I use it to trade. So some of it is like, you know, my actual trade fund. So I can put it over on sites like BitMEX and Bybit, and I can trade with leverage. So for example, you know, if you have, and I'm just going to use round numbers so it's easy math. I'm not saying this is how much I have or don't have. But let's say a person has a $100,000 trade fund, right? Instead of putting $100,000 on Bybit, right, they can put like $5,000 on Bybit or $5,000 worth of Bitcoin, right? And then they can just trade with 20x leverage, and now they're doing 100K trades while only having $5,000 over there. So that's the reason that I had as much Bitcoin as I have, is because I was trading with it, right? Using it for my leverage and stuff. But it's also nice to have it as a hedge, right? In case I am wrong. But I fully expect it to lose most of its value. And, you know, it's just the cost of doing business. That's my overhead. You know, normal businesses have utility bills and things like that. I have the cost of holding Bitcoin. Of course, that's actually starting to change now because Bybit has introduced Tether trading. So I am starting to consider maybe putting some money in Tether, but I actually trust Bitcoin more than Tether. So there's that. Okay. But overall, that's what I'm saying, guys. It just looks like a standard bubble on the stock market, and I do think that Bitcoin was born, you know, in the beginning of a bull market, and it had its entire climb to $20,000 during a bull market. And I think that what we'll see is if the stock market does indeed crash, and no one knows if it will, but if it does indeed crash and does indeed end up being another bubble, then I think Bitcoin's going to go down with it. You know, I saw, it was part of that thread on Twitter, there was all these like really big famous traders, and like one of them was saying that if we do enter into a depression, right, not a recession but an actual depression, that he would, you know, foresee the stock market falling 80%. Now, I don't think the stock market's going to fall 80%, but I'm certainly not as experienced in that arena, so maybe I'm wrong. You know, I'm still of the mindset that I think it's going to fall down at most, and this is just my opinion, okay? So take it with a grain of salt, but I'm still looking for like a 50 to 53% pullback, right? Like on the S&P, I'm looking forward to go back down to around 1600, which a lot of experts, you know, have actually come out and said the same thing, which is nice because it's nice for me to know that, hey, other people agree with what, I also think. But same thing on the Dow Jones. I can see this thing pulling back from 30,000 up here, back down to this old monthly support down around 13, 14,000, and that'd be about a 52% pullback. It would definitely shock me if we had an 80% pullback, but, again, anything's possible. It depends on how bad the fallout from all this, Corona is. With the stock market, it's not like Bitcoin. It's not just charts. It's not just speculation. These are actual things happening in the world that affect us. These are things in the world, companies' earnings reports affect how much their stock is worth. When a company goes bankrupt, that obviously kills their stock. The more companies that go bankrupt, the more stocks go under, the more the market's going to take a hit. So, with all that being said, I think I'm going to go ahead and wrap up there, guys. I hope you enjoyed the video. I wanted to do an extra one because obviously that was a really big movement in the market. I'm sure it scared some people who were bearish, and I'm sure that it scared some people who maybe were sitting on the sidelines waiting to buy back Bitcoin. So I wanted to give my take on it. Of course, it's just that. It's just my opinion and nothing more. All right? So please remember that I am just some guy sitting in a spare bedroom, and nothing in the video is financial advice. Nothing in the video is trade advice. You should always do your own due diligence and seek out professional investment advice before making any type of investment in cryptocurrency or the stock market. This is James with Crypto Common Sense, reminding you to please trade safe.